Ladies and gentlemen, good day and welcome to PCBL Limited Q4 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjesh Jain from ICICI Securities. Thank you, and over to you, sir.
Thanks, Lizanne. Good afternoon, everyone. Thank you for joining on for the PCBL Limited Q4 and FY23 results conference call. We have PCBL management on the call today, represented by Mr. Kaushik Roy, Managing Director, Mr. Raj Gupta, Chief Financial Officer, Mr. Saket Shah, Head Investor Relations, and Mr. Pankaj Kedia, Vice President, Investor Relations. I would like to invite Mr. Kaushik Roy to initiate the call with his opening remarks, post which we will have a Q&A session. Over to you, sir.
Thank you so much. Good afternoon, everyone. Thank you for taking time out to join us today for this call. Our results are announced today, and I will quickly take you through the update and then open it up for questions. We will start with the highlights of our performance of fourth quarter. PCBL reported a good operating and financial performance during the quarter. We reported a sales volume of 119,238 metric tons during the quarter. This was backed by domestic sales volume of 80,045 metric tons and international sales volume of 39,193 metric tons. If you look segment-wise, the entire accounted for 79,617 metric tons. Performance Chemical reported sales volume of 28,126 metric tons, and Specialty Chemicals sales stood at 11,495 metric tons. Our revenue increased year-on-year from 1,219 crores to 1,374 crores in Q4 FY23. EBITDA increased to 200 crores year-on-year from 148 crores. EBITDA per metric ton stood at 16,767. PAT stood at 102 crores during the quarter. Power generation increased from 149 million units in Q4 FY22 to 153 million units during the quarter, with external sales volume of 96 million units as against 91 million units in Q4 FY22. With rising demand for power in the country and consequent increase in power tariff, PCBL's average realization against power sales saw a sharp jump up to 3.93 per kilowatt hour year-on-year from 3.30 per kilowatt hour in Q4 FY22. Now, let me talk about FY23 full year performance. Our revenue increased year-on-year from 4,446 crores to 5,874 crores in FY23. EBITDA increased to 775 crores year-on-year from 682 crores. EBITDA per metric ton stood at 17,405. PAT stood at 444 crores during the year. PCBL reported sales volume of 4,45,184 metric tons during the year. This was backed by domestic sales volume of 308,717 metric ton and international sales volume of 136,467 metric ton. If we look at segment-wise sales, tire accounted for 312,209 metric tons. Performance chemical reported sales volume of 92,600 metric ton and specialty chemical sales of 40,375 metric ton. Power generation increased from 544 million units in FY22 to 597 million units during the year, with external sales volume of 366 million units as against 321 million units in FY22. With rising demand for power in the country and consequent increase in power tariffs, PCBL's average realization against power sales saw a sharp jump up to 3.81 per kilowatt year on year from 2.99 per kilowatt in FY22. Despite steep increase in crude price, EBITDA per metric ton has improved on the back of improvement in operating efficiencies, product mix changes, and strong performance from power segment. Current market scenario and outlook. In the domestic market, demand is growing with continued strong momentum in OEM segment and improvement in replacement market as well. We expect tire demand to remain healthy going forward. In FY22 and FY23, Indian tire industry volume grew at 10% plus CAGR. Going forward over the next couple of years, we expect tire industry growth to settle in high single-digit volume growth. This would help the carbon black industry to increase capacity utilization. International market is witnessing visible signs of pickup in demand, and we expect demand outlook to sustain over medium term. We expect further recovery in international market. PCBL is geared for the next leg of growth with sufficient capacity to cater to demand from India and global markets. The company has taken several initiatives to expand its overseas market presence and expects consistent improvement in international sales volume. Status update on expansion plans. First phase of greenfield project in Chennai, in Tamil Nadu, being implemented by PCBL Tamil Nadu, has been commissioned. Rest of the capacity is going to be commissioned over the next 3 months or so in phases. First phase of brownfield expansion of specialty lines at Mundra is almost ready and is under commissioning. So that is the summation I had on the business outlook. At this point, I am more than happy to open it up to the floor for questions, please. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madhav from Fidelity. Please go ahead.
Yeah, good evening. Thank you so much for your time. I wanted to ask, I was just reading about the global carbon black scenario, and I think there was some news flow around either Europe or US looking to ban import of carbon black from Russia, I think sometime this year or next year. And also, I think US looking to impose some import duties as well on import of any Russian carbon black. So just wanted to get your thoughts, like, is that something which has happened already or something which is under discussion?
Well, there has been this talk going on for some time. Europe talked about banning import of carbon black from Russia from June 2024. USA has talked about it, but they have not defined any timeline as in today. So in the current scenario, Russia is still supplying to Europe as well as to USA. But I guess, the customers from Europe and USA, they are possibly looking at other options as well, which is in a way good for an organization like PCBL. So while generally there is a bit of a challenge on the economic side in Europe, but because of this reason that they might be looking at alternate sources against Russia, so it will be an advantageous position for us.
Have you seen any increased inquiries from customers in Europe and US trying to diversify away from Russia?
Yes, we have seen some increase in inquiries from both USA and Europe. USA as such structurally is also not really in favor of not importing, because the supply demand gap is increasing. There is no new capacity which has come up in USA in recent times, whereas demand has gone up over a period of time. So USA anyway structurally they need to import from outside, and this Russian thing is kind of added problem for them. And Europe, as I already said, they are looking at other options. So therefore, this is where we stand. And to my mind, it is a sweet spot for us.
Understood. Got it. Because what we understand is, at least reading some of the global commentary on tires or carbon black or auto industry, seems like carbon black is in some sort of a shortage, or might be in entering into a shortage scenario in Europe and US, going ahead because of what's happening, especially in Russia. Is that a fair understanding to have?
Yeah, I think demand is likely to remain strong, and if Russia is not able to supply, Russia is a fairly big force, and then obviously it will be kind of, I'll not say this shortage really, but I think the demand will be strong, which is good for everyone in the carbon black industry.
Got it. Okay, I'll come back in the queue. Thank you.
Sure.
Thank you. We'll move on to the next question. That is from the line of Vishal Prasad from VP Capital. Please go ahead.
Hi, sir. Sir,
Hi.
The battery chemicals that we are working on, so is there any update there?
On the battery?
Battery chemicals?
Carbon nanotubes. Right. It is part of our specialty chemicals portfolio. And in that portfolio, we have plastic, ink, paint, coating, and also battery chemicals, carbonaceous material actually. And the research team is still working on. They have made some progress already, but the final product has still not come out. We have looked at some products which are closer in terms of specification and characteristics, but some fine tuning is still going on. So I guess we'll be there very soon. But a lot of progress, yes, we have made in this area.
So, sir, I understand we are still not there, but if you could talk about the opportunities that we see in battery chemicals, so that I understand the opportunity size, the kind of customers we are looking at, the continents we are looking at, that would be helpful.
Well, as I already said, it is part of the specialty chemical portfolio. And in terms of opportunity, as more and more EV vehicles come on the road, this will be a kind of requirement for automobile manufacturers and actually for the battery manufacturers. But at this moment, the percentage of vehicles with EV is still, compared to the IC engine-based vehicles, it is much lesser. So not absolute term, it is huge market, but it is likely to be a fast-growing market, as more and more fossil fuel-driven vehicles will be replaced with electric-driven vehicles, which is battery-driven vehicle in this case. So we are also keeping pace with that. And I think as soon as possible, we'll come out with this final product, which then can bring value back to the organization in a big way.
And sir, usually once we have the product, what's the approval cycle? It takes years or it's few months?
Sorry, come again?
So once we have the product, so usually what's the approval cycle from our clients in battery chemicals? It is months or it may take years?
No, it may not take years, but it can take anywhere between, say, 6 months to 1 year or maybe a little more than 1 year, but not like 3-4 years or something. No, not really. I think we can manage within a year's time.
Okay, and sir, last question, sir. What are hybrid fillers? You have mentioned it in the deck. So, if you could help me understand.
Hybrid filler?
Yeah, under specialty chemical.
Have you read something somewhere? You were referring to that, or?
No, your deck, under just beside nanotubes, you mentioned hybrid fillers.
Right.
Yeah.
That is in the space of material science. Our R&D team is also working on some areas which is directly relating to advanced material science, and nanotube is one of them. Nanomaterials are one of them, which has got different applications in not only tire but much beyond tire also. But it is a completely newer kind of product, and it is based on fundamental research. So this is the hybrid material we have talked about in the deck.
Okay, but I was not talking about carbon nanotubes, sir. Under focus on futuristic technologies, we mentioned hybrid fillers.
Hybrid fillers is talking about the composites of polymers and carbon gas.
See, I'll tell you, for different applications in rubber particularly, we are also looking at a possibility of mixing different polymers with carbon black and come out with certain properties. It can be for rubber. It also can be used for things like plastic. So both kind of application we are looking at. But it is not yet taken a final shape because we are trying out with a few different polymers. And we have to come out with the final one which is suiting the requirement of tire, particularly from the angle of, say, oil grip or noise reduction or reduction of rolling resistance to bring down the fuel consumption. So these are some of the opportunities we are exploring at this point of time. But it is at the stage of exploration at this moment.
Okay.
And nanotube, what I just now mentioned, that is also one of them, kind of.
Right. Thank you, sir.
Thanks.
Thank you. The next question is on the line of Aditya Khetan from SMIFS Institutional. Please go ahead.
Yeah, thank you for the opportunity. Sir, first question is also the carbon black prices. So carbon black prices have been correcting and the trend is largely onto the declining side only. So this is largely led by decline in raw material prices, or you are witnessing some sort of demand impact into the exports or into the domestic market for this quarter only?
See, the raw material price increase, we are kind of immune to cost increase or decrease, because in most cases we have a formula understanding with our customers. So whether it increases or it decreases, it is normally a pass-through for us. So we focus more on the market demand side rather. That is from the market side. Purely we look at the demand, and from our side, what we look at, offering higher value products to our customers to get market share from maybe other competitors and better services. That is from our side purely, and demand is driven by the market, of course.
Okay. And sir, how are you seeing the demand in Southeast Asia? Because that is a larger pie into the export market, and considering inflation biting the consumer budget, do you see any near-term pain in demand into the exports market?
So I think demand, to my mind, globally will be strong. Especially Asia will be very strong from demand point of view. And I think we are also well geared up, because the Chennai plant, as I mentioned a while back, it is in commissioning stage. First phase has already been commissioned. So we are in a spot where we can capture this growth which is likely to happen in South Asian market particularly, and also beyond that in USA possibly. Right? Europe is a little bit of a challenge, but overall basis, I think it is looking pretty positive at the moment.
Okay. Sir, our volumes in this quarter have gone up quite significantly. So this is largely led by that first phase expansion, of, so what would be the utilization of the current plant which we have started in this quarter? If you can share some numbers on it.
You were talking about Chennai?
Yes, yes.
Okay, Chennai in this financial year, we are likely to utilize roughly about 40 to 50% of the capacity. It honestly depends on the approval process of different customers and the time required for that. If it is approved faster, we might be able to utilize it more. But if it is approval takes more time, then it might take also little more. We might not be able to utilize 40-50% capacity. But based on our understanding of the
40% utilization onto that 62,000 tons which we have done, right?
40% is roughly about 60,000. You're right. 40% is roughly about 60,000 odd. So we do expect that we'll be able to utilize to that extent.
Sir, one last question, sir. Onto the spreads part, we have witnessed that on quarter-on-quarter basis that spreads have corrected. So are we into a scenario wherein the spreads would continue to decline and come to a normalized level, which we have seen over the last 4-5 years, or the upcoming specialty black capacity expansion that can offset that decline into the normal grade carbon black? So how you see this trend to move from here on?
See, I'll tell you, the carbon black which is used in tire, it has got certain properties and certain application in tire. And that will continue. There is no question of it is not being used. It's a major raw material for tire industry. And the utilization of carbon black will continue. So that one stream continues and definitely will grow along with that business growth. And specialty is kind of independent. It has got multiple applications. It goes into plastic-related application. It goes into paint. It goes into ink, coating, batteries. Many other applications it goes into. It is like part of our daily life. So both will grow to my mind.
So do we see the spreads that so the current quarter spreads are sustainable or there could be further pain, sir?
Current quarter of what is sustainable? Specialty.
So the spreads of current quarter, what we have reported, so that
Spread of current quarter, I think it is, yeah. I think in near term, I think we will be able to maintain that. We should be able to maintain that. We're quite positive about it.
Okay.
We're quite positive about it, yeah. I mean, little bit benefit we got in recent times because of some corrections here and there, which cannot be, but overall it will be decent. Anything you want to add?
Got it, sir. Thank you, sir.
Thank you. The next question is on the line of Chintan Chheda from Quest Investment Advisors Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my first question is on specialty carbon black. So this quarter we have reported record high volumes in the specialty business. So how do you see this trajectory going forward for FY24?
We should be looking at further growth from here on, keeping in mind particularly the Mundra line is going to come into operation. So we do expect a decent growth. I mean, other than this numbers what we have already achieved in Q4, we'll definitely maintain and possibly improve from there on. Yeah. So easily say this rate will be maintained and additionally maybe we'll look for another 10,000 tons. 10 to 12,000 overall we'll be looking at for sure.
So another 10 to 12,000 on this FY23 numbers, full year numbers.
That's right, on the FY23 numbers, which means I'm talking about 25% growth kind of thing.
Yeah, got it. Great, thanks. And secondly, sir, just one question on the spread part. With respect to currently this coal tar prices have corrected a lot in China.
Sorry to interrupt,
Right.
sir. We are not able to hear you. Mr. Chheda?
Is this better now?
Much better. Thank you.
Yeah, thank you. So recently we have seen that the coal tar prices in China have corrected quite a bit. So
Right.
because of that, are we seeing any pressure on the spreads for our company in the export market?
Not really, because coal tar is not a direct raw material for carbon black. The direct raw material is actually CBO. Now CBO prices have not come down that much. It has come down marginally. but still there is quite a bit of gap between petro-based product and CBO. So far we have not seen any major issue or anything really. And I don't think that's the cause of concern as well. My colleague also wants to add something, Mr. Raj.
Yeah.
And even at the current level of coal tar, because of drop in crude prices, CBFS is still about $70-80 cheaper per ton. So, and this difference will be significantly higher with CBO.
Okay. So earlier we were seeing in the earlier quarters that the difference between CBFS and CBO had gone somewhere above $300. So how much would be that difference as of date?
That difference actually went up to almost $500, till a couple of months back. That difference is again back to that $250-300.
Okay. So in that case, our say blended gross margins per ton, will they be around this say 30-31 levels for FY24 per kg? I'm talking about.
Yeah, like our MD just mentioned that we are hopeful of maintaining rates.
Okay, got that.
Here and there can always happen, but by and large, we still will be on a strong wicket in that sense.
Yeah, got that, sir. Thank you very much.
Thank you. The next question is from the line of Varshab Shah from Envision Capital. Please go ahead.
Yes, sir. Thank you for taking my question. So you mentioned earlier that there was a 10% volume growth for tire industry in this fiscal. But then why have our volumes declined for the entire year? Did we face any capacity constraints, like while we were operating at max utilization? Hello, am I audible?
Yeah. I think there's some problem with the line. Now it's clear. We talked about growth of tire industry, yes, of course, but last year was little unusual. I just want to mention that there was huge up and down price, which consequently impacted all the crude-based raw materials to tire industry. And that led to major inventory adjustment at tire industry side. And what happened in particularly two quarters, in quarter 1 and quarter 3, there were inventory correction on account of tire industry, on side of tire industry, which negatively impacted us. So there's no direct correlation last year because of unusual volatility in crude. That is what happened last year. But now crude has more or less come to a level and it is likely to remain within a range. And if it is range bound, then this kind of inventory corrections normally doesn't happen. So going forward in this financial year, we're hopeful things will be much better.
And so did I hear you correctly that 40% capacity utilization for the new Tamil Nadu plant for the overall capacity of 147,000 tons? So an additional 50-60,000 tons from that new plant.
Yeah, that's what.
All right.
Roughly
Thank you, sir.
40%. Yeah, I'll tell you roughly about against this 147,000 rods, we'll be roughly getting based on the actual product mix around 120,000, 125,000 maximum of carbon black, right? And 40-50% of that we are hopeful to utilize this year itself, subject to certain approvals from different tire companies, which we are hopeful about, and which we have kind of considered in our planning this year. And additionally, Mundra specialty line will give some volume to us. And at the same time, what I just mentioned that Q3 and Q4 were not good last year because of inventory correction. Hopefully this year it will not happen. That will also add to some volume. So overall, from this 445,000 what we have seen this year, we feel we should be crossing 500,000 tons comfortably in the coming financial year, which is FY24.
All right, sir. Thank you. Thank you for taking my question.
Thank you. The next question is on the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So, just wanted to understand on the specialty carbon black side. So, given that the global demand is about 1 million tons, and if we assume India to be at 70k tons and we are making 40k tons, but largely out of 40k tons, 70% we are exporting. So I wanted to understand in the domestic industry, out of the total sales of specialty carbon in the domestic industry, who are the top players? And if you could understand some kind of market share based on the sales of specialty carbon in India.
Okay, I'm requesting Mr. Raj to respond to this question of yours.
Radha, we are growing very rapidly and aggressively in the specialty space, and therefore we did not want to depend, completely on Indian market demand. And therefore the focus was to spread out and add more customers everywhere across the globe. So this was a strategic decision taken by the company, and therefore currently almost 2/3 of our volumes we are selling in international market. The market size is very large, and that will take care of our next 5-6 years of expansion without even having to eat into other market player shares, because the market itself is growing at 7-8% CAGR.
Understood, sir. Would, based on the 30% sales volume in India that we are doing, is it safe to assume that we are the largest player in specialty carbon black as well in India?
In terms of manufacturing, yes, but in terms of market share, no, because lot of specialty material which comes in India, those grades we don't have in our portfolio yet. And a good part of Indian requirement is currently being imported. But as we keep on adding these grades to our portfolio, then of course, that's an opportunity for us.
So are you talking about conductive and superconductive grades?
So even in the ink, paint and dye segment, there are a number of grades currently where we are not present.
Sir, a year back we had 45 grades in specialty carbon, and we were planning to add 9 to 10 grades every year. So is it at 55 as of now?
Yeah, so if you look at our growth in specialty, it is not only volumes which is increasing every passing year, but the portfolio is also expanding. We already have about close to between 45 to 50 odd grades, and if you go through our annual report, you will see a fair coverage on that, which indicates all the grades that we have launched in last year. So currently also when we publish our annual report, you will get an insight into all the grades that we have launched or commercialized during the year. So the portfolio is expanding even horizontally.
Understood, sir. And sir, so this feedstock prices between India and China, so previously it was $300 difference, and now you mentioned 215. So what could be the reason, because we were largely expecting it to increase, and even if this is a short-term phenomena, so what would be the reason for this reduction in the difference between India and China feedstock prices?
See, again, these feedstocks are derivative of two different things. Our feedstock is a derivative of crude, and price of it depends on the moment in crude prices. And Chinese feedstock is largely carbon black oil, which is a derivative of coal. So the price of that material will largely depend on the coal prices and also the demand supply of coal tar and CBO in their economy. So these are two different materials, and therefore the price points are always different. And depending on the demand and supply of each of these materials, the arbitrage between the two materials keeps changing over periods. Having said that, even the current price difference is significant. In this business, especially on the tire grade, the average gross margin that we make is just about $400 per ton of finished goods. So with a $300 plus kind of a price difference at raw material level, you can't compete, right? So despite all the drop in coal tar prices, CBO still is expensive.
Understood. And sir, so we were expecting some peer companies to commission their plants in this year, in FY24, for example, Continental and some capacities in Balkrishna and Epsilon. So, do you expect this to carbon black prices to reduce in this year because of this excess supply to continue to reduce?
See, the overall opportunity for growth is very large for Indian carbon black manufacturers, and that is the reason why even the non-carbon black players are entering this space, right? And so far as we are concerned, we don't depend solely on Indian market. We have a reasonably good presence across different geographies, and in last 6-7 years, we have also invested heavily in our supply chain capabilities across markets wherever we see potential. So we are very optimistic about utilizing our capacities, the whole capacity that we have added now, maybe in next 2.5 years.
Understood, sir. Yeah, thank you. I'll come back in the queue.
Thanks, sir.
Thank you. The next question is from the line of Madhav from Fidelity. Please go ahead.
I just had one follow-up. I think in April we had incorporated a new subsidiary for specialty chemicals in Europe. Just wanted to understand what is that about? Like, are we looking at any new initiatives there?
Madhav, this we did not incorporate because of specialty chemicals. So in Europe actually, or rather in Belgium, we already had our R&D center. Now, there are a few projects where the Belgian government is contributing to the whole R&D program. So there's a kind of sponsorship from the government. But that comes with a condition that only local entities can participate in those projects. Now, our branch was like a wing of PCBL India. So it was not considered as a local entity. And therefore, in order to increase our R&D bandwidth and participate in those programs, we decided to convert that branch into a local entity. So that is the rationale behind. So it will continue to carry out on the R&D activities primarily, and maybe some sales and marketing, because now that we have this subsidiary, we can also cater to the local customers, through local invoicing and all. But primarily it is for R&D activities. It was already there, in a way.
Got it. Okay. Thank you.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, thank you. Thanks for the opportunity. I got a few questions. First, on the Chennai facility, this incremental capacity consumption, what we are talking in the tune of 50 to 60,000 metric ton in FY24. Do you expect that mix to be more tilted towards export and less domestic? How should we see, and what is the implication of this on the overall branded spread? That's my first question.
Yeah. So, I think we'll be supplying from Chennai to both international customers as well as domestic. Now, it will kind of also depend on how fast we get approval from different customers. Our primary objective initially will be to utilize the full capacity as quickly as possible. So that is the primary objective. So it also depends on approval status from different customers. So we are a little bit flexible on this. But as an organization, international market is important for us. It's a big market, and we need to grow in that market quickly and rapidly. So we are open for both. In terms of margin, I think nowadays both international and domestic margin are equally healthy and strong. So we are not too worried about margins, whether it is the India supply or international supply. Both are fine with us. So in a blended manner, it is quite okay. There's no issue.
Clear, sir. Second, now we are talking of faster ramp up in the capacity, and we are also seeing an opportunity there. Are we also thinking to add the remaining 50,000 metric ton in Chennai, which we intend to?
Yeah, I think we need to explore that. We are already having some discussions, and we are starting the market because, as I mentioned, beyond India, there are opportunities outside India also. and being a large player in this field, there's no reason why you should not grab that. So possibly we'll hear some announcement from us on this very soon. But before that, we want to see how fast this capacity is getting utilized or some indication we get. And once we have that clarity, then possibly we'll go ahead. But that might not take a longer time because, initially when you put up a new plant, it takes typically 2 years kind of thing. But brownfield doesn't take that much of time. It is normally faster. So that is one advantage of brownfield. And definitely we can go ahead with that capacity as soon as we feel it is all right to go ahead.
But will that end all the land available for us, or post that also we have scope to expand the capacity in the Chennai, or we will consume the entire land with that expansion?
We'll have options. So one is Chennai, if we get some adjacent land, we may go for further expansion there. Even existing one also we can go for, but we'll prefer to have a green, spacious land, so therefore we'll not put too much of pressure there. Other option we have a lot of space available in Mundra plant.
Okay.
Mundra is another option where a lot of land is available. So we can look at Mundra also. But we'll cross the bridge as and when it comes.
Got it. Second, next on the market situation. So I was looking at the peer presentation. They are clearly showing that US is having a demand-supply gap in favor of demand. And we have Europe market, which is now becoming favorable with the probable regulatory curtails on the Russia side of it. Do you think export market become too lucrative for us, and do you think it is sustainable over a longer period of time?
I think international market will definitely be lucrative, no doubt about it. And I think with the mindset of being a global player, we should not bifurcate too much between India and outside India. In India, we are a leading player. Of course, we'll maintain that leading position. But at the same time, we want to grow in different parts of the globe, especially US. And I think the stage is set for that. And this is a structural situation. Like in USA, this demand-supply gap will only increase over a period of time. So it will be, in a way, a kind of positive and sustainable over a period of time. Europe, I'm not sure whether they will go back to Russia after some time, but even in Europe, there is no new facility coming up as such, whereas the demand is growing. So even in Europe, structurally it is all right, but yes, Russia is next door, and tomorrow if this regulatory control restrictions will withdrawn, there will be a bit of a challenge, but I think we are equally capable to face that kind of challenge. So net, my take on this, the international market is very attractive for us going forward, and at the same time, we'll definitely maintain leadership position in India. You want that?
Good.
So that's our thought process and strategy. We'll be working in it.
Just one last question from my side on the silica part of it. Now that Tata Chemical is also expanding the capacity, do you think that silica can become a bit of a challenge for us going forward, as more and more percentage in the tire is replaced by carbon to silica?
No, not really. Silica cannot be utilized beyond a certain percentage because the properties of carbon black and silica are quite different. The properties which are offered by carbon black, silica cannot offer. And same way, silica offers certain things which carbon black cannot offer. So to my mind, both will have its own space. Silica will grow in its own space, and we will be growing in our own space, carbon black. So it is not that we'll be eating each other's share. That will not happen really.
So what is the share of carbon black and silica in a tire at an optimal level, you think?
Well, carbon black in terms of volume, it is about close to 24%. Silica, I don't remember exactly. I think it is somewhere around 2, 3, 4%. 2%, I think. It is 2%. 2%.
Fair enough, sir. Thank you. Thank you for answering all that question, and best of luck for the coming quarters.
Thank you. Thank you.
Thank you. The next question is from the line of Dhiral from Phillip Capital PCG. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. So my question is again pertaining to this spread. You mentioned that the current spread will remain same for next few quarters. But for the full year 24, you still reiterate to improve by 1,000 rupees per ton or maybe 1 rupee per kg as you guided earlier.
Yeah, I'll just give it to Raj to respond to this question. Just hold on.
Yeah, Neeraj. So our guidance a year back was that because of our product mix changes, operating leverage, and also improving manufacturing efficiency, it is likely that our margins would expand by about 1,000 rupees a year. But last year, if you look at the jump in spread, it was about close to 2,700 rupees. Now, a good part of that was because of higher power, realization, and our higher power sales, right? So increase in power segment profitability. And also about 600-700 rupees out of the total margin was on account of opportunities, which got created because of disruption in the market, this war between, Ukraine, Russia and all. Now, those are market opportunities and those are not structural changes in our efficiency. So therefore, this year, I think with our further improvement in our efficiency, we should be able to maintain what we could achieve in last year. So it is not going to increase by 1,000 rupees over last year's number.
So is it safe to understand, sir, at least for FY23 average, which was there in, on the gross margin per kg side, which is around 32 rupees, that will try to maintain, or maybe on the EBITDA part, which is around 16 rupees, 44 paise, that we try to maintain for FY24?
Yeah. That's what we are hopeful on.
Okay. And sir, on the power side, what is our guidance for FY24 and what kind of average, power rate we can assume? So for FY23, it was like 3.81 paise. So what will be for FY24, sir?
I would not comment on power tariffs because that's a function of, again, power market demand and supply, right? But as of now, it looks that the overall energy demand is in favor of power tariffs. Power tariffs, number of states the tariffs have gone up. So it is unlikely that power tariffs are going to come down sharply from the current level. In terms of volume, I think last quarter's power volumes are reflective of our, next year's performance, sales performance.
Okay. And so what is the outlook on the debt part, sir, and what could be the peak debt by March 24 as we are still, expanding, on the specialty part?
Most of the capital expenditure has already been incurred, a good part of that. So a very small portion is left out now. And if crude remains at current level, we don't see any increase in the gross debt.
Okay, so it will be same as FY23. Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is on the line of Jigar Shah from Maybank. Please go ahead.
Good evening and congratulations for good performance for FY23.
Thank you. Good evening.
My question is regarding your specialty strategy. So, specialty, as per your guidance or your answer to one of the questions, should grow at about 25% this year, so it should touch about 50,000 tons. Say over the next few years, when it goes to 80,000 or 100,000 tons on an annual basis, where would it put us on a global map? Like we are 6th or 7th largest globally in the carbon black business. Where would 80,000 or 100,000 tons of sales volume put us in terms of the specialty players, and what all else you are looking to do to get to that position?
Jigar, the current gap between the top 3 players and us is significantly large. They are all above 100,000 tons already, all 3 of them. And with our volume of last year, we are already at 4th position. So even
sorry, they are already at?
They are already at 4th position in the specialty, ranking.
Right.
Now, So even that 100,000 tons in next 4-5 years is not going to change our rank, but certainly it is going to close the gap between us and the third largest specialty player.
Right.
Now what we are doing is essentially, see, there are three things. One, of course, we are launching newer grades every year, so we are expanding our portfolio, right? Also, always, newer grades which we are launching can't be produced on the equipment that we have. So there is again, lot of bandwidth increase in the area of process technology, so process and equipment technology. So there is a team which is working on creating equipment which can give us the desired properties in the newer grade. And third, of course, is a marketing related strategy. So we are reaching out to more customers across group and expanding the customer base so that when we increase the volumes of the existing grades as well as when we launch newer grades, then we have ready access to all the customers. So the strategy for specialty is based on these three thoughts. So would you want to add something to it?
Just one thing I want to add here, while we are looking at specialty growth, but at the same time we are keeping an eye on the value-added specialty growth. It is like a pyramid. The top one being conductive battery purpose, and then it comes down to the lowest level, which is big plastic application. So our focus is more on the value-added product. So the objective is, growth, but profitable growth. That is the objective.
Thank you so much. Appreciate this response and wish you all the best.
Thank you so much. Thanks.
Thank you. The next question is from the line of Anupam Agarwal from Lucky Investment Managers. Please go ahead.
Yeah, hi, sir. Congratulations on good numbers. Just a clarification on the second phase of your Chennai plant commissioning, if you can give the timelines, please.
Come again? Sorry, I missed your first part. Come again, please.
The timelines for commissioning the second phase of Chennai plant.
Okay, I think, one part, almost 50% of the plant has already been commissioned, we have announced. And the rest also is, right now the trials are going on. And within next 3 months or around that, we will be formally commissioning it.
All right. And Mundra, the 20,000 plus 20,000, or incrementally 40 coming together, or that's also in phases?
So the first phase out of that is almost in final stage. Within the next month or two, we'll be announcing commissioning of that also. The first phase out of this 40. And the second phase, we might take some more time.
But will that commission by the end of FY24 or that will happen FY25?
That will possibly go into the end of this financial year maybe or early next financial year.
Okay. Just a second clarification on the debt the repayment schedule. I understood the earlier participant's question that there won't be an increase in the debt. Any repayment schedule you can help us with?
Yeah, I'm requesting Raj to respond to this. Just a second, he will respond to your question.
First of all, our long-term loan book is very small. It's just about 270 odd crores. And second, most of these loans are for a period between 5 to 7 years. So it is well spread over next 4 or 5 years. So talking about 50-60 crore kind of a repayment every year.
50-60 crore repayment every year.
Yeah.
All right. We have a 1100 crore CWIP. I understand that's part of the Chennai and Mundra plant. So what will be the capex like in FY24?
So like I said that we are almost through with our capex program. This year there will be incremental about 150 odd crore investment on brownfield expansion and maybe about 100 odd crore in Chennai. Roughly about 250 odd crores will be the capex for the current year.
Got it. Lastly, just a qualitative guidance if you can give us. Over the last 2-3 years, we've been talking of yield improvements every year. How far are we in meeting our targets? What is happening on ground with respect to that? Just some ballpark color will be helpful.
I missed your question, Anupam.
Can you repeat? It was not clear. Can you repeat, please?
Yeah. What I'm saying is, last 2-3 years, we've been talking of yield improvements. So what exactly is happening on ground with respect to our targets? What percentage are we at there? How far are we in touching our targets? And if you can give some color there, please.
Anupam, we have been talking about yield improvement not 2-3 years, but 4-5 years, and there has been consistent improvement. In fact, the increase in margin performance that you are seeing now and last few years is also partly on account of yield improvement. In some of the grades, we have already set the industry benchmark, so we are leader there. I mean, we are the best performers in some of the grades. In some of the grades, we are closing on in the with the gap with the best manufacturers of those grades. And of course, I mean, there is further scope for improvement. So it also, I mean, largely the gap is wherever the gap is, that is largely identified. But in some cases, that would require replacement of equipment. And I mean, based on the trade-off between the residual life of the equipment and the benefit that we'll get out of yield improvement, doesn't work out currently. So it makes sense for us to allow those equipments to be depreciated completely, and then when we replace them with new equipment, this efficiency will creep in. But most of this efficiency will be visible in the new plant in Tamil Nadu from first year itself.
And the benefit of that yield improvement will also flow in from the first year itself?
Yeah, largely it should be there, but grade stabilization takes time. So first year may not be indicative of the full efficiency. Okay. I guess second year would be a better indicator of the plant efficiency.
Perfect. That's all from my side, and wish you all the best. Thank you so much.
Thank you.
Thank you. The next question is from the line of Jainam Gilani from Swan Investments. Please go ahead.
Hi, sir. Thanks for giving the opportunity to ask the question. So, sir, what would be our capex plans for FY25?
25, MD just mentioned that we are still chalking out our growth plans, and it will also depend on, capacity utilization we achieve, in next few quarters. But having said that, while the current market conditions remain little volatile, but from long-term growth perspective, we are very optimistic, and we believe that in next 5-6 years, we should continue to grow at lower double digit, maybe 12-13% kind of, and that would require constant capacity addition every passing year. So it is little early for us to give you some indication about the capex for 25, but maybe in next 2 quarters or so, we would have done our work and would be able to give you more clarity. Mundra second line will, of course, come up either by end of this year or early next year. But that's a small capex actually. That's not much. So like I said that 2024 we are going to incur about 250 odd crores. 2025 if we decide to add capacity on brownfield, then it will be a small expenditure. But if we decide to go a little large, then again, between 2025 and 26, again we'll be incurring about close to 800-900 crores.
Okay, sir. So what would be a target ROC for the next 2 years?
So last 5 years, if you look at our average ROC, we have been around 18-19%. Now, with capacity addition, when we incur capex, typically, there is no return on that capex for during the this period, implementation period. But once the capex is completed, then ROC increases. So I think we should be, over a mid to long term, I think we should remain around 20%. That's how this is, because we'll be in a constant capex, phase between now and 2030. That's how we see it. So with that, ROC should be around 20%, not 8%.
And sir, one of the earlier participants had asked a question about gross margin. So I just wanted to confirm whether were we saying that we can reach 29 to 30% gross margins in FY24, or I got it wrong?
It will not be appropriate to look at our margins in percentage terms, because that will vary depending on the crude level.
Okay.
So in absolute terms, whatever we have achieved in the current year, we are hopeful that we should be able to maintain that and build upon that going forward, because of change in product mix and manufacturing efficiency improvement.
Thank you, sir. That's it from my side. Thanks a lot for answering the questions, and all the best. Thank you.
Thank you, Jana.
Thank you. Ladies and gentlemen, we'll be taking the last question. That is from the line of Aditya Khetan from SMIFS Institutional. Please go ahead.
Sir, thank you for the follow-up. Sir, during this quarter, into the specialty black business, we had witnessed almost 30% jump in volumes on quarter-on-quarter basis. But despite this, sir, our gross spreads have contracted by 7%. Sir, just want to know if the specialty volumes are going up, they are commanding around 2 to 2.5 times margins than the normal spread. So our spread should ideally have been remained constant or might have gone up to some extent. But we are witnessing dip in spread, so that indicates that the normal grade business and the performance chemicals business, so they are struggling quite hard. Is there any sense, which you can give us, how is the business shaping on to that front? Because the numbers are not matching.
No, so Aditya, see what happened in last quarter was there was a significant level of inventory reduction at our customers' end, both for specialty as well as for tire customers. Now, therefore, we were caught up with a little higher inventory in the last quarter, which was based on high raw material prices. So that volume, when we sold in this quarter, our margins were not at the same level, right? So we made significantly lower margin in that volume. And therefore, the blended margin for the year, for the quarter, fourth quarter, looks a little lower compared to the previous quarter. That is the reason.
Okay. And so our guidance also we have reduced by rupees 1 per kilo for the next 2 years. I suppose we are expanding by the similar fashion only. So specialty black, we would be adding 10,000 tons volume per annum. So what is the reason like you're downgrading your guidance of 1 rupee per kilo? So we will be maintaining that. Are you witnessing that pain into the performance chemicals, which is from the latex side, that will continue for the next year, or from the tire segment you are witnessing some demand constraints, because the guidance and the numbers are not that we are not getting that correctly.
I don't think, Aditya, we have changed our guidance. There is no change in our guidance. Where did you get that number?
So we are maintaining our EBITDA per kilo, like for the current quarter. Earlier we had stated, so we will be improving by rupees 1 per kilo per annum. So what is the reason for that?
Okay.
Despite increase in specialty volumes.
So Aditya, when we were saying 1 rupee per kg per year, we were mentioning that on an average in next 5 years' time, our average EBITDA performance is going to increase by at 1 rupee per kg per year. But between last year and this year, if you compare our EBITDA, it has gone up by 2.7 rupees. Now, in a particular year, if there is a significant jump, essentially that full amount doesn't come from internal efficiency. Part of that is also because of the opportunities in the market. So therefore, we are saying that in the current year, we will try and ensure that we remain at the last year's number. Even that number will be little higher than what was indicated a year back. So based on our 1 year back guidance, our 2024 EBITDA per ton should have been somewhere around 16,400. We are still talking about 16,700, right? 16,700 or 17,000 rupees. So that's still little higher than the guidance given. So you have to see it in that perspective.
Okay, sir. Got it.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. On behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.